Hello guys, welcome back to the dollar index masterclass, right? So in the part one of this class, I talked about the vision of the dollar index, right? What controls the dollar index, how to analyze the dollar index, strategies to analyze the dollar index, and the importance of the dollar index, right? So in this part two of the course, I would like to talk about what influences the dollar index. That is what causes the dollar index to rally or why what causes it to fall, right? What strengthens or weakens the dollar index, right? So these are the factors that causes the strength or weakness of the dollar index. Number one, you have here the bond market, right? So I will likely do a little bit of a talk about them. Right? So I talked about what the bond market is and also talk about what the stock market is, right? Yeah, at least we have known what the bond market is and what the stock market is. Then I'll talk about inflation, the GDP, right? Then the labor market and geopolitics. So these are the main drivers that it is that causes the United States, the US, the dollar to rise or fall fundamentally, right? So when you see that when you see that the dollar index is weak or the dollar index is strong, it's as a result of these factors, right? Yeah, these are the factors behind the strength or weakness of the dollar index or the DXY, right? So first of all, the first one is what the bond market. Second one is the stock market, inflation, GDP, labor market, right? The labor data, right? Yeah, the labor data and geopolitics, right? So if you can understand all of this, you should know why the dollar is strong or why the dollar is weak, and the strength or weakness of the dollar is tied to these six major factors, right? Yeah. So let's hop in and see what we can get from this class, right? So if you have not subscribed to my channel, kindly subscribe, like, and turn on your notification bell so that you can get good understanding of the market, right? So as for me, I'm a trader. I trade fundamental analysis. I use fundamental analysis to determine my market sentiment or market buyer. Then I use technical analysis for entry. Like I've always established in my trading community, no technical analysis is useless. They are all useful, right? Yeah, the most important thing in the market for you to do is to understand the trend of the market using fundamental analysis. That why the market is why a particular currency pair or why the dollar is selling or buying at a particular time, right? So with this, we should wait to know what causes the strength or weakness of the dollar, right? So let's start. Let's get started. Number one, from the previous video, I've explained what the bond market is, but for those of us for some persons that would likely jump into the part two of this course, right? Let me talk about the bond market, right? So for what I said from the part one of this course, I said the bond market is an avenue where government borrow money from, the populace, right? They borrow money from the people, right? Then they issue them bonds, right? Yeah, and they can borrow money from the people depending on the time, depending on the number of years. Some 2 years, y- you know, 3 years, 5 years, 10 years, 30 years. They are called what treasury yields, right? United States treasury yields, right? So in various countries, they operate them, right? You see treasury bills, 2 years notes, 5 years, 10 years, you understand? So depending on the number of years that they want to do at a particular time. So, and I've showed us on the chart that the bond market is positively correlated to the dollar index. How do I mean? That means if the bond market is doing well, the dollar should do well. And bonds normally do well, especially when doing risk off market sentiment, when there's global tension or when there's uh, uh, global uncertainty. That is where bond market normally is normally attractive, so that people can safeguard their capital, right, instead of looking for profit at that particular time. But when there is no geopolitical crisis and all of that, the bond market will not do well, but the stock market should do well at a particular time, right? So now this is one of the reasons why the dollar index is weak or strong. It says the US Treasury market is the backbone of the dollar. Take note of this. The US Treasury market, right? I talked about the Treasury market, right? So when the Treasury yields are doing well, we expect the dollar to be strong. But when it's doing badly, that means the dollar to crash, right? So say when bond yield rises, right, like 10 years yield, it attracts global investors to buy United States dominated assets, right? And also as a safe haven demand or whatever it is, right? Yeah. Then, for example, say if the Fed raises interest rates, bond yield rises. Now, I will talk about these interest rates because in my subsequent videos, I'm going to talk about details of interest rate and when to hike rates, when the interest rate is being hiked, what causes it, when the interest rate is being lowered, what causes it, or when interest rate is being sticky, or when it is neutral, right? What is the cause and why is it so, right? I would likely discuss that in my subsequent videos, right? But if the Fed increase the interest rate, right, the bond normally rises at a particular time because it attracts foreign investors to come and buy the dollar at that particular time, right? Conversely, if the yield falls, dollar weakens, right? Now we saw that the yield has the dollar is weak right now because of what? Because of the bond yield, right? Yeah, the dollar is weak, right? So this is one of the reasons why United States dollar is weak or DXY is weak because of what? Because of the United States Treasury, right? Right now, the stock market is rallying strong, so people are selling off their bonds to buy into stocks, right? So bonds are like, place where is especially a risk off market, too, right? So that people can avert danger you know and buy into risk of market sentiment. But when geopolitics is favorable, right? People start buying into what the stock market, right? So every country have their own stock market, right? But the United States stock market is very, very important in terms of what the dollar index, right? So if the stock market is doing well, like I showed us on the chart that S&P 500, Nasdaq, they are doing well. So we expect the bond market, right? So sorry, we expect the dollar index to crash, right? Because the stock market is doing so. If you look at US 30 being bullish, right? Look at it bullish, right? It says bullish. Look at Nasdaq 100 bullish, right? Yeah. And if you look at S&P 500, look at they're all bullish, right? Whenever the United States dollar is doing well, the stock market should crash. Only whenever stock market is doing well, the United States dollar should not go well because as you can see, they are they are inversely correlated. That means they're negatively correlated. They don't go in the same direction. And I've showed us from the last video, right? So the stock market is also a factor that affects the dollar index. So during risk on and risk off, right? In subsequent videos, I'll talk about what is risk on and risk off, right? Yeah, in details, right? So if global investors are confident, right, stocks rally. I don't talk about it, right? That means they're confident in taking risk in investment. You see stock market to rally and they sell the dollar, and they buy stocks, right? So by the time they sell the dollar, the stock market should what? By the time they sell dollar, so they sell dollar to buy stocks, right? Yeah, so that's one of the if the market crashes, then you risk off. Investors rush into the dollar as what? As safety. That means as safe haven. So we expect dollar to what to rise. So example is during the 2008 economic meltdown and COVID-19 or COVID-19 pandemic per se, right? At that particular time, we saw that dollar spiked because of the dollar was acting as what is safe haven commodity that time. At that time, the bond market is so powerful and the stock market has crashed because people at that time there was no movement, social distancing and all of that. So people could not, the stock market crashed massively. Why? The dollar and the bond market were so strong. So if you can analyze the bond market, the stock market, I tell you, you know where the dollar is going. You understand? So these are the things that give strength to witness to the United States dollar. Number three is what? Inflation. So these are some of the topic I will discuss later, but for the scope of this class, I'm focusing on these are the factors that causes the strength or weakness of the dollar index or the United States dollar. Now, we all understand what inflation means, right? Yeah, we all understand what inflation means, and these are the traders should know what inflation is, right? So in a subject class, I will likely talk about it in detail about inflation is one of the biggest dollar index or what drives the dollar, right? So when now they here is the confusing part here. People think a higher inflation means should mean a bearish dollar. No, no. When inflation is high, It means it signals that the Fed should hike interest rate. That is what it is. So if you have a hot inflation data, when inflation figure that comes out like on Thursday, where we have US inflation, right? If the US inflation that comes out is hotter than expected, that means if it's higher than market expectation, it's higher. That means though right now the first I'm talking about rate hike, right? Because they started cutting, they're about to start cutting rate. So on a normal day, if they're not talking about cutting rate, they are rate is sticky, and the data that came out, the CPI data that came out is hot, right? I mean, the Fed will signal a rate hike. And whenever a rate is being hiked, that means what the dollar would likely get strength. That's what it is. Understand that. Now, a low inflation data means the Fed choose, we likely go to cut rate. That would likely devalue the currency. All right. So a low inflation data signals what weak United States dollar. Now you understand what causes the strength or weakness of the dollar, right? When inflation is high, we expect a stronger dollar because Fed will likely hike interest rate, signal rate hike. But when the inflation is low, and the standard for inflation is 2%, you understand? So if inflation is low, the Fed is signaling rate cut or devaluation of the United States dollar, right? That means CPI. These are the main inflation data, the CPI and the PCE, right? Yeah. The PCE, right? Yeah. So these are the tools that Fed use, right? Yes, to analyze this inflation data. As you can see, a hot CPI data will likely signals rate hike, right? Yeah. So in 2002, the dollar was flying because of what the hot CPI data that gave rise to, a Powell giving hint on rate hike. So the dollar was just flying because of that. So dollar inflation signals high inflation figures or hot inflation figures above market expectation signals rate hike. Why low inflation data that are below market expectation signals rate cuts, right? And devaluation of the currency, and which is bad for the United States dollar. So take note. Another another factor that influences the strength or weakness of the dollar is the GDP, right? Gross domestic product, which talks about the ability of the country to manufacture for manufacture goods and you know export, right? So if a country is known for more, if they have more export than import, right, it will likely increase the GDP of a particular country's currency because the more they're exporting, the more investors are buying into the country's economy. They buy their currency to do transaction, right, in that with that economy. That's why you see this tariff hike and all of that, right? As Trump is slamming tariffs on other currencies or the country that they are trading partner, right? It's trying to boost the country's currency and give value. So the country will pay more by, you know, by buying the dollar more expensive for them to buy, right? Yeah. So if the country's export is greater than that of their import, right? Right. So we are saying that the country GDP will likely that means the countries do well and the GDP is strong, right? So a stronger US GDP signals head the economy, which will likely boost investors' confidence in United States dollar. So it will likely signals what it will likely signals that it will likely signals a higher dollar index, which is what the dollar is doing well, right? Why a weaker GDP shows that the economy is not doing well. I believe investors will not likely invest in the economy that's not doing well. So when the economy is doing well, it attracts investors. You understand, right? It boosts investors' confidence. People from other part of the world would likely come and invest in the United States bond market, right? So now you see the connection between the bond market, dollar index, and GDP, right? Yeah. So, but here is something to say. If growth is too high, listen to this. If growth is too high, it's too hot, or the GDP data is too hot, right? It fuels inflation and the right and which lead to what rate hike. You understand? So GDP ties to expectation of what of Fed policy. To an extent, when we have if when we have too much hot data, it will lead to what? rate high because of the inflation. And whenever inflation is high, what the Fed used to correct inflation is what? Interest rates. And it will really trigger the high interest rate will trigger foreign investors to come and invest in the United States. So it strengthens the United States dollar. So when you see, so whenever we say hot GDP figure, we have with a similarly for rate hike, right? And we have stronger bond market, just know that that particular period, the dollar index should be strong. Dollar is strong. So you cannot trade against the dollar at that particular time. So these are the fundamental factors why we trade, why we buy the dollar or why we sell the dollar or why we use the dollar index as a tool to analyze the market. You understand? So when you can put all of this together, trading becomes easier, trading becomes understandable. You will not jump into the market anyhow, like every other retail trader. You analyze, you trade the market the way institutions trade the market because this is how they analyze the market. You understand? Then the last one I have here is the labor market, right? The labor market. I'm talking about the labor force, the job, right? Yeah. So labor, I'm talking about the data itself, not just the labor market, the data, right? Strong labor data, strong job data means strong United States dollar, right? But weaker job data signals, you know, job report, right? Like the NFP that we saw on Friday, right? Because of the job data that was poor, we saw that the dollar crashed and the dollar is still going to fall more due to due to rate cut. So labor is critical because Fed's one of the fundamental duties of the labor of the Fed is to what? Provide employment, right, and stabilize the inflation, right? Yeah. So the core duties of the Feds, of the central bank governors or the central bank committee or the banking the central bank of the country is to stabilize inflation and maximize what the labor right keep track of the labor market, right? Yeah, so if a country has a strong labor market, strong labor market or job data that's strong, it means the country's currency is strong because they use it to track the productivity of the country, which leads to GDP, right? Which leads to a stronger GDP because labor market is strong, GDP and employment are strong, right? So it gives strength to the particular country's currency, right? So a stronger job data like non-farm payroll, and retail sales and all of that, right? Yeah, they give and low unemployment and high employment data they give they signal the strength of a particular country's currency and what it can lead to what rate hike. Any rate hike at all leads to stronger dollar. So a weaker job data like the data we saw on Friday for NFP was 22,000 against the market expectation of 75,000, right? So that was why we saw the dollar be going down since that Friday, right? So poor job data speculate gives Fed the ability to what the signal to cut rate. That is what we are seeing, and come on the 17th of this month, they will likely cut rate, right? So you can see the correlation between uh labor the labor the labor force or labor market per se and rate cut or rate hike, right? Yeah, so we can easily see the difference and how this whole thing to happen, right? So as a trader, you should not underestimate this data, especially dollar index or what causes this trade weakness of the dollar index. Now, conclusion. We have come to the end of the masterclass of dollar index. But before we go, let us conclude by saying that the dollar index is more than just a chart. This, for me, right, I see it as, the backbone of everything as a trader. Because as a trader, for you to understand what goes on in the first market, you should understand what goes on in the United States economy. If you cannot analyze the United States economy, then you are not ready, you are not ready to trade the forex market at all. Because all of this, I've tried to explain bonds, stock market, the dollar index, inflation, to an extent interest rate, to an extent the GDP and the labor market, right? So all of these have touched every aspect of the United States economy and how they affect the dollar index and how the dollar index affects the global currency and the global market, right? So the dollar index is more just like it's more than a chart per se. It's the heartbeat of the global financial system. You understand, right? So it's the heartbeat of the global financial system because the US dollar is the world reserve currency. So the DXY gives to the a clear picture of the strength or weakness of the dollar at the particular moment, right? So it moves as shaped by what the bond, the stock, inflation, GDP, labor, and global risk. No, there's one I did talk about. I did talk about the global risk, right? Although I've talked about it when I was trying to explain risk on and risk off, right? At least you should understand what is global tension like COVID-19 or uh, economic meltdown. You see the dollar will strengthen because it acts at what is safe haven currency, right? Although there are other safe haven currencies, right? We have the CHF, the JPY, and the safe haven commodity. We have gold. You understand? So the dollar at that particular time serves as what is safe haven currency, right? So instead of geopolitical crisis, it strengthens the dollar as well. Now for traders, understanding dollar index is like checking your weather forecast before leaving your home. So it doesn't tell you everything, but it prepares you for the conditions ahead. In fact, or lastly, mastering dollar index helps you to trade with bigger picture in mind, right? It aligns your strategies with the market flow. See, the market runs on fundamental analysis and it runs on these factors that are listed here: the bond market, the stocks, inflation, GDP, interest rate, labor, right? And understanding global politics, which has to do with what a geopolitical crisis, tensions, and how it affects the forex market, right? So if you are serious about fundamental analysis, the DSY is not an option; it's a necessity. You understand? So with this, we have come to the conclusion of the dollar index, right? So, like I've always said, I'm a trader that have seen the importance and benefits of fundamental analysis, right? So, as a trader, when I do my analysis, I normally start it with the dollar index. A proper understanding and analysis of dollar index gives you an edge over everything. Once you know where the dollar is going, you already know where gold is going, where Euro US is going, where GBP US is going, when USD card is going, when so the G8 currencies, right? Where the G8 currencies, all the major pairs are going, right? Yeah. So that is how the dollar index is analyzed. That's how you trade the market, right? So if you have not subscribed to my channel, kindly subscribe, like, and comment, and turn on your notification bell, right? So that is how I analyze the market using the dollar index. So we have come to the end of this class. So expect more good topics on fundamental analysis, right? And stay glued to my channel because you will learn a lot. And also, if you're interested in my fundamental analysis masterclass, right? You can DM me right in my channel, right? You can DM me for more details and I'll give you because I'm open for my September fundamental analysis masterclass, right? For fundamental analysis masterclass. So you can come in and become part of my trading community. I give technical analysis. I also do fundamental analysis, deeper fundamental analysis, and we post more signals and all of that in my trading community. All right, thank you and have a lovely day ahead.